Hello and welcome to FX Street Currency in Play. I'm Matt Brown. I'm joined by Ryan Littlestone from ForexFlow.live. How are you today, Ryan?
I'm very good, Matt. How are you?
Very well. Well, the start of the quarter and the final quarter already of 2017. Who knew? FX market's actually fairly active this morning, so we'll kick off with the headlines. UK manufacturing PMI shows a bigger than expected drop in September, and related to that, cable threatening the 1.33, 133 level post this UK PMI. So bad numbers out of the UK. Obviously, there's been a lot of talk over recent weeks of potential rate hikes, probably a little bit sooner than maybe the market expected, and we'd seen obviously the likes of cable and the pound across the board actually strengthen. Weak numbers. I mean, what does this now mean for Mr. Carney?
Well, it certainly sows a bit of some seeds of doubt, doesn't it, against the hike? But the market's still expecting it. It's going to take a bit more than one data point to obviously swing it. But if we start seeing a series of data going against him, then the market's going to think, oh, Carney's, he's had his over again, promised the earth, and the data is going to make sure he doesn't deliver. But it's been a mixed bag in Europe as well today. It's been fairly good. The data's still fairly good in the manufacturing PMIs. So that's but the market's ignoring it this morning. I'm not sure if we're seeing this morning a bit of repositioning from the month in the quarter end, because what we can see is a lot of action as the quarter closes. But then on the first couple of days of the month, you can see some of those positions being reinstated for the new quarter. Because there's not been any real news out today that's driven the market. We saw some yen buying early on, which started the cable and euro move lower. Then the dollar picked up a bit of a head of steam, and now we're seeing that move against the board. But there's nothing really behind the moves. And as we've seen, 133's held, give or take a few pips, and this morning, and the euro's holding its support as well, just ahead of last week's lows. So you've got to watch these levels. If they break, then maybe we're going to get something bigger. But while they hold, then got some confidence against them.
And last week we saw on the back of the German election, we saw the euro getting a little bit weaker, and obviously this weekend we've had the Catalans voting whether that's, it's not a legitimate, as the Spanish government is saying, referendum, but indication 90% of those that did vote were actually voting for independence. That probably hasn't really fed through to the euro yet, but I mean, Spain is a sovereign state, so should Brussels really be getting involved and saying anything? But I think for the whole European model, when you're looking at certainly after the Brexit referendum, if you're looking at independence in Spain, that surely is worrying for the euro and the European model going forward. Yeah,
it's another bit of political upheaval that we're facing. Germany has sort of calmed down in the markets, but until a government gets sorted, there's always going to be a few jitters. They may say that the Catalonian referendum is illegal in Spain, but you got a 90% vote, which is hardly a shock, really. I'm surprised it wasn't more. But I think what's grabbed the market attention is the violence that's gone alongside it. Whether it's difficult to comment on someone else's politics to that great extent, but that's not the sort of headlines you want to be reading. If they've had a vote, okay, it's not a legal vote, then fine. What they're going to vote, but to have this violence, I think that's just unnerved the market a touch as well, because are we going to get another political battle? Is Spain going to heat up? We've obviously had terrible events from Spain in historically. We don't want to see Spain descended into that sort of mischief again. So again, yes, we're seeing the political side of things affect the market, and that's going to continue until they get to some sort of peaceful resolution out of it.
And unfortunately, as it's playing out at the moment, we've got the atrocities happening in Las Vegas. I think at the moment 20 dead, so it's very, very sad for obviously all those involved. But it feels, events like this, sometimes the market takes a step back, and it doesn't have an impact necessarily on the market itself, but it's obviously getting a lot of news flow across the wires, so be aware of that. We touched on you touched on yen earlier. Just dollar yen, US Japan 10-year yield spread at 12-week high, risk reversals slide. So again, another currency pair to keep an eye on at the moment with key levels. If we see those breaking, I think that could be quite
Yeah,
important.
and the yen's very interesting to watch. I highlighted it last week that we need to keep an eye with the Japanese elections coming up as well. We need to keep an eye on the vols. Something I look at is the 1 month vols in yen at the money options, because they're going to give us an indication of whether we're going to see some volatility entering the Japan elections, and obviously that has an adverse effect on the other currencies like the euro and the pound. So when when you're looking at bonds and the yields and things like that, and even the options, we've got to keep an eye now that if we're going to see some increase in volatility, that's going to affect the markets. But again, it's another round of politics from Japan. So once again, we're stuck in the mire with everything political.
Understood. But sound advice, obviously, looking at the vol there, just to get an indication of how that election will pan out. Just focusing back now onto euro dollar, and we've obviously touched on that, but looking at the chart, and we had that kind of head and shoulders there forming. Again, just pick out some levels here. I mean, we're around 117.40, I believe. Where can it go from here, and potentially what levels are you particularly looking at?
Yeah, the 1700 levels is a pretty strong one at the moment. You can see even back in August we had slight dips below, but we didn't stay there for long, and then we came back above 117. So it's a big level to watch. If that breaks, then we could be heading to 116 pretty quickly. I think last week I mentioned that 117 was a level I was looking
Yes.
at. We got the bounce last week up to 118 from touching down to sort of 117.15, those sort of areas. But it's quickly come back again, and you've got to worry when a market keeps coming back to test as a big support level. If you get a break, then it's going to be potentially a big one. So if you want to buy the euro down here, then obviously you can lean against that 1700 level, but keep your stop pretty tight, probably under somewhere like 1680 or something like that, and just watch if any of those lows start giving way. Then we're heading further south.
Understood. A few months ago, you rightly called the euro strength, and that was a brilliant trade. So, what's your view? I mean, obviously you were bullish, I think back in June, July, for this currency pair. Are you reassessing that at this point?
No, at the moment I'm okay with the trade still, because what's driving is a lot of the dollar side. But what I'm going to be looking for is the reaction to the ECB when they announce what they announce. That's going to be my key assessment point, because if the news that comes out is bullish for the euro and it bounces, then I'm going to want to see that 120 level tested and broken. If we get another test and a fail up there, then I'm perhaps going to think, right, time to take a bit more off the table, because the market is now pricing this in. And then I'll look for the range, depending on where we are, something like the 1700 to the 120. And if we sit in that range, and I'm happy in a trade. If we do start breaking down, then you've got to listen to what the market's telling you, and perhaps then we've found a top in the euro for a while. Key
advice: listen to what the market's telling you. You can't
Always.
be bigger than the market.
No.
Understood. And another currency pair. Obviously, we mentioned the pound and the strength that we've seen, giving a little bit back, and these PMI numbers this morning, as you rightly say, it's just one data point. So,
Yeah.
Things could change. But Mark Carney has definitely geared up the market for a rate hike, whether that's a continued stance after, if we do get a rate hike. But it's giving a little bit back. Dollar strength or sterling weakness, or a bit of both?
It's a mixture, really. I mean, we always look at the pound, and it's such a difficult one with Brexit, because we rode all the way up to 136, and everything's hunky dory, everything's fine, and then suddenly we get a couple of headlines and down we come. The key point here is that we've had a hike insinuated from the Bank of England, yet here we are testing 133 instead of testing the highs. That is being driven by the dollar, but also Brexit comes into it, but May's sort of her speech in Florence, it's had sort of a minor positive vibe to it. Europe saying it was a good speech because now hopefully it will kickstart negotiations properly. But we're still, David Davis comes out and he's bullish about it. Yeah, we had good talks, everything was brilliant. Then Barnier comes out and said, well, there's not been any real progress. So it's this tit for tat and political posturing again. But yeah, it's being driven by the dollar at the moment, but data like this morning isn't going to help it at all. But while again we've got a big level there, 133. If we hold that, then you've got a decent base.
Understood. And finally, looking ahead to the rest of the day, the key one from the US is the ISM manufacturing PMI. That's due out at 3 o'clock, and I think that would maybe draw a bit of focus. We've also just one Fed member speaking today, Kaplan, so not as much Fed speak as we saw last week. Non-farm payrolls, though, this week comes around very, very quickly these days as you get older. Anything else that you're looking at focusing on, being aware of this week?
Yeah, I mean, the ISM is always a big number. Everyone's aligned now. It's manufacturing day across the world almost. And as you point out there, the price is paid. It's all about inflation in the US. So we could see a poor manufacturing number. That won't affect the market. But if we get a decent prices paid number or a drop in the prices paid, again, people can go, the Fed are worrying about inflation again. And that'll be the key point. Same with the non-farms end of the week. It's all going to be about the wages rather than the actual headline number.
Understood. Well, Ryan, as always, thank you very much for joining us on FX Street Currency and Play.